on the year-end close process. I'm Dee Bowers, and I'll be your moderator. So before we jump into the webinar, I'm going to go over how to use a webinar pane just briefly. On the right side of your monitor, you should see an orange arrow. If you click that arrow, you'll be able to toggle your webinar pane between the open and closed position. You'll also see a small chat window. Feel free to enter your questions in throughout the webinar. We'll answer those at the Q&A session at the end of our webinar as time allows. Now's a good time to also double check your audio settings. So on the GoToWebinar pane, you should see an area for audio settings. Just go ahead and make sure you have the right option selected. So if you've dialed in on your telephone, make sure you have the telephone option selected. And if you're using your computer, please make sure you've selected the Use Mic and Speakers option. So I just also wanted to note that this webinar is being recorded. We'll be sending out a link to the slide deck and recording within 48 hours. So if you're interested in sharing that with coworkers or watching it again, just keep an eye out for that. So with that, I'd like to go ahead and introduce today's presenters. First we have Aaron Chan, who's a senior consultant within our Dynamics GP practice here at Armanino. Aaron has over 10 years of experience with GP and is also a Microsoft Certified Master. She also has a number of great blog articles up on our Dynamics blog. I'm also pleased to introduce Leanne McGilrath, Senior Consultant within our GP practice at Armanino. Leanne brings over 16 years of experience implementing Microsoft Dynamics GP, and she is specializing in core financials, distribution, multi-currency and intercompany, management reporter, FRX, and various third-party solutions. So it's great to have you guys both here, and with that, I'm going to turn the presentation over to Leanne.
Okay, thank you. So welcome to the Year-End Close Planning webinar. We're going to go over the closing of the modules in the order that they should be closed, and that is sales, inventory, purchasing, fixed assets, general ledger, and we put payroll at the end because that has some unique and very specific timing requirements, and we'll be discussing that in detail as we go through that. So it's important that you go through the closing in this order. That ensures that each module has all of the transactions posted before you close those modules. So I want to point out that the support is ending for GP 2010 effective 10/31/2015. So prior to that time next year, you want to be sure if you're on GP 2010 that you do contact us to help you upgrade, because you want to be sure to be on a supported version so you are able to get all of the necessary software updates. We recommend that you, We recommend that you use a planning checklist much like the one that I have displayed here, and have a meeting with the people involved so that everyone knows what they need to do and when. Some of the key things you'll want to have on that checklist are downloading the checklist from the customer source that have the detailed steps of what we're going to talk about today, installing the year-end update when it's available, ordering your forms, testing your backups, and so forth. And the year-end update will be available the end of this month. Microsoft will be releasing that, and you'll be able to download that from the Microsoft customer source if you search on Microsoft Dynamics GP 2014 year-end update. And just a reminder, this is the last year for those of you on GP 2010 that will get a year-end update. So again, you'll want to upgrade before October of next year. The year-end update this year, as it normally does, it includes things in regards to payroll, but it also has a couple things for other modules such as 1099 interest changes and a fixed asset luxury auto depreciation change, and GP 2013 will have the Affordable Care Act functionality in it. So I'm going to hand this over to Aaron to go over the sales closing.
Okay, thank you, Leanne. So before we start the module review, I just wanted to let you know that the general way that you want to approach each module for your year-end close is you want to review your regular month-end processing and do any reporting that you need through the year-end for each module. You want to make sure that we do a check of your setups for each module, maintaining history, etc. And then you want to be able to print your reports before closing any of the modules. So now I'll review the sales module. So in the sales module, we want you to do your normal month-end activities where we want to post all sales invoices, cash receipts, run commissions, and if necessary, run a sales reconcile for the entire module. This will ensure that all of your transactions are posted, everything is processed as needed, and then you'll go ahead and close your sales module. We want to make sure that you close your sales module as close as you can to the end of your fiscal year, and also close the calendar year as well. So to review some of the customer setups that you want to make sure you have already selected in your existing environment is you want to make sure you understand the balance type and that you maintain history for all of the customers, every type of history that is. Here I am showing a window of the customer class setup window. And in addition to that, the customer class setups will roll down to the customer settings. However, if you have created customers and not used classes, you want to make sure that you review the customer cards, again looking at the balance type and maintaining history. This next slide points out some of the windows in GP that will be updated at your year-end close. So in this window, the customer summary window, you can see that you can choose a customer and you can look at the activity that has gone on throughout the year. There are 3 different views to this particular window, and so depending on the views, the updates will be used accordingly. Of course, the amount since last close will only be updated since the last time you closed. If we take a look at the fiscal year view, you will see that we have data in the year-to-date columns and the last year columns, and during the close process, the year-to-date column will move over to the last year will move over to life-to-date. So the metrics for each of your customers, the sales and whatnot, will be updated only at the year-end close process. Summary information, here's another payment information. Here's another window that gets updated during that year-end close process. Everything that has a year-to-date and life-to-date basically gets updated. Salesperson year-to-date sales will also be updated. This is in relation to commissions, territories as well. So if you're tracking that kind of activity in GP, make sure that you understand that those will also be updated. In addition to the windows that I have shown, some of the reporting and the metrics similar to the windows, including Smart List, all of those will update. So if you use any reporting that relies on this activity, note that you make sure that you export or print out those reports prior to doing the close so that the data will be as accurate as the day that you closed it. This is the actual window for said process when you do the year-end close. So if your fiscal year is not the same as calendar, feel free to do them at separate times when appropriate. If they are the same calendar year end for your fiscal year, then you will just click on all. You want to make sure to check the box that says print the report, and what this actually will print out is a summary for each customer of those metrics that I had just mentioned before. This report can be quite lengthy, so normally I would tell a client to just go ahead and save them in a text file format to their drive on their server, and then it'll be available for review. But know that this could be a really long report. I mean, we're talking hundreds of pages for some people. It is not required that you print out the report, but I think it's good if you're going to run the process anyways. That way, if you had to data mine those data points, you can get them. Next, we'll talk inventory. So the inventory module, of course, is integrated with your sales and your purchasing. So you want to make sure that you post all sales invoices and purchasing and do all your receipts. Do any of your inventory adjustments that are needed throughout the end of the year. Run the inventory reconcile utility. Take your physical counts, post those adjustments. Then again, we will review some item settings, some reports that you should run, and then the year-end close window. So very similar to the customer class settings, we have item class settings. So again, you want to make sure that the box on the lower left-hand corner that says maintain history, that those boxes are checked off. And on the individual items, there under the options button is the same box in the lower right-hand corner. So again, if the classes are set there, you can also assume that the items are set there. If you have set up items and not assigned classes, then this is something you want to review. You can also set up the smart list to maybe review some of this setup to make sure that everything is checked off as needed. During the year-end close process, we have a couple of different options in addition to closing the year that can actually be selected. One of the options is remove discontinued items. So this means that any discontinued item where you mark it discontinued in the active section, then you can say any discontinued items that have 0 on-hand quantity will be marked as discontinued for the item and then will be removed during the year-end close process. So this can actually help you to maintain your item master and make sure you don't have any items that are not necessary. And the quantity on hand in the lower right-hand corner is what will show you if there's any quantity on hand. It's important to note that if you still want to run sales reports that include items that are discontinued, you do not want to run this process. The next option I want to highlight during your inventory close process is the ability to remove sold receipts and cost change history prior to a given time frame. This process is typically run to reduce the length of the purchase receipts layer in your purchase receipt report, and I'll show an example on the next slide. Note that the date field is there so that you can choose to put in a date maybe 3 years back or so that you make sure you keep current history but eliminate something that was kind of inconsequential at this point. Here's an example of the purchase receipts report. You can see over in this particular report there are many layers to it for any given item number. So this report shows all receipts, inventory adjustments, and basic inventory movements. All the changes where during this process where the value remaining is 0, that is the layer that will be removed. Next, we have updating item standard costs. So only mark this box if you're using a standard cost method of the periodic valuation. When you mark this box, the current cost in the item will replace standard costs. If you update your standard cost manually, do not do this step as it is an optional feature of the year-end procedures. So here is an example of how your items are set up. If your evaluation method has the word periodic after it, that's where this procedure will take place. So it will only work for the ones that have periodic valuation marked. Some of the windows that will be updated during your windows and metrics that will be updated during your year-end close process is the it is especially important for people running analytics on their quantities sold. So it is a report, it will report the amount sold since the last time you closed and also the return quantity. So these are the 2 areas that will be updated. Here's an example of the inventory turnover report, which is one of the several reports that we do think that you should run during the inventory close process. Some of the other 2 reports that we suggest are the stock status and the purchase receipts. We will also, after this webinar, be sending you links to Microsoft, which has more detailed instructions for each of these modules. So we're just giving you an overview here today, but many of the reports that are suggested will be in those articles. So next we will be moving on to purchasing, where I will hand it back to Leanne.
Okay, thank you, Erin. So with the purchasing year-end close, it's very similar. It has a lot of similarities to the sales closing in that it is moving year-to-date amounts in the amount since last closed fields. So it's moving year-to-date amounts to last year. So that's very, very similar to what we saw in the sales side, only we're dealing with vendor cards instead of customer cards. But a key difference in the purchasing closing, of course, is your 1099 processing. So here's a list of the key things that happen in the purchasing closing, and that's certainly you want to ensure that you have tax ID numbers for your 1099 vendors, post all of your payables invoices, post all of your payments, post all voids, and reconcile the utility in the purchasing series, and then ultimately the closing of your purchasing series. And again, like the sales module, you want to run the close as close as possible to the end of the actual closing date. So ideally, if your fiscal year is a calendar year, then you'll be doing both, and you want to do that as soon as possible after the close of December. And in regards to the 1099 process, which again is a big part of the calendar year-end close, is printing your 1099s and keeping in mind your deadlines. So the recipients have to have them by February 2nd of 2015. IRS has to have them by March 2nd of 2015, and your electronic filing deadline is March 31st of 2015. And do note that if you have more than 250 1099s, you will have to file those electronically. And in the purchasing area, again, looking at the class level, you can set whether or not the vendor is what tax type the vendor is. And on this screen here, you can see that in this class, because they're contractual service, they're considered the majority of the vendors in a miscellaneous tax type. So it's good practice to set the tax type on the class level, and that will roll down to vendors that you add in that class. However, you can also specify this at the vendor level, and at the vendor level, it rolls forward the tax type from the class, but on the vendor level, you're going to specify the box. And typically for miscellaneous, it's box number 7, but as you can see, you have the other boxes to choose from. And it's also good practice to check the 1099 setup window. This is where the minimum amounts are maintained that are defined by the government as to the minimum total amount paid to the vendor in the year. And if it's more than that, then a 1099 has to be reported. And if you find in your preparation of your 1099 that you have vendors that do not have the correct amount, you can adjust that on the 1099 details window. And on this window, you can look at what it's going to report when it's set to the year and the appropriate year. And then to change that, you're going to set it to the month. And if you want to, if you have like a lump sum that you need to change, you can just put it into the month of December. With GP 2013, you also have this Edit 1099 Transaction Information window where you can actually adjust down to the transaction level. Now, when you print your 1099s, in a moment you're going to see the window where that's done, and the tax registration number on the company setup window will default onto that window. So it's a good practice to have your company's tax registration number on this company setup window before you go to print your 1099. So on the print 1099 window is where you're not only going to print your 1099s, but you can also run the 1099 edit report. And that is very handy to view all of the information of the vendors that have more than the minimum amount. In this case, it's $600. To double check, do you have the tax ID number? Do you have the correct address and the name? And does the 1099 amount look correct? You can view that for all of the vendors. You could also do restrictions to see only certain vendors or vendor classes and so forth. And you can run the edit list repeatedly. Now, when you actually print the 1099s, again, you're having the same settings that you ran for the edit list, the year, the type of 1099. You'll, of course, want to make sure that your tax ID number is in this field. It will populate from the company setup window if it's in there. And you want to print the alignment form first just to make sure that everything is printing in the appropriate boxes. And then you click the Print Forms button, and that will actually print the 1099. And again, you'll want to have ordered your 1099 forms previously, as the layout is designed to print on the government form. And if you're on GP 2013, you have the ability to print the 1096 form as well. Prior to GP 13 versions, you have to manually prepare that form. I apologize, all of a sudden I have a delay to get to the next window here. There we go. Okay, so when you actually do the closing, notice the window looks very similar to what we saw in the sales module. So again, you have your option of the fiscal year end close or the calendar year end close. If it's one and the same, you would mark it set to all. And when you run the close, it's going to move those year-to-date amounts in the last amounts since last closed fields, moving them from last year, year-to-date to last year. Okay. And lastly, if you do find that you have more than 250 1099s to issue, and you do therefore need to file them electronically, you want to contact Christina Ignacio of our office. If you don't already own the Green Shades software, you'll need that for electronic filing of your 1099s out of accounts payable. Okay, so on to fixed assets. So the fixed assets year-end close, the first thing that you want to do is make sure that you've done all your month-end processes. So at the end of the year, you still want to make sure that you've done your month-end processes for period 12. And including in that, you want to be sure to run these key reports. And if you're on versions prior to GP 2013, it's imperative that you print these reports because you won't be able to print them after you do the close and get the same information. And that's because the closing process in the fixed assets module is going to clear out the year-to-date depreciation field. It does a few other things, which I'll be talking about momentarily, but that's one of the key things that it does. And in versions prior to GP 2013, it did not store that information for you to be able to go back and run the reports historically. Luckily, they changed that with GP 2013, so you can print them again in the future, but it's good practice that when you're doing your year-end, go ahead and run these reports. So included in the list, annual activity, additions, retirements, transfers, depreciation ledger, property ledger, and the fixed assets to general ledger reconciliation. And I recognize that some of these reports can be quite large, so of course you can print them to PDF for record keeping. So once you have your reports done, you can then do your year-end close. But I want to mention a key thing is that in your month-end processes is making sure that you've run depreciation through the end of period 12, at the end of your year, because that's really key that you have everything depreciated through the end of the year before you do your year-end close. But even just as important, you want to make sure that you don't do any depreciation for the new year until you've run the depreciation, until you've closed the year for fixed assets. Because again, it's clearing out that year-to-date depreciation amount on each and every asset. So here's an example of one report that's key. This is your annual activity. And why we have this report shown is that notice over here at the beginning of the year, it has a column called Begin Year, and it has some amounts here. And that is pulling from the Begin Cost field, and that is another field that gets updated as a part of the year-end close. And I'll show you the field in a moment on another screen. But when you actually do the closing, you're going to close by book. And so notice that you may have books that are not on a fiscal year basis. They may be on a calendar year basis, such as tax books. So just be careful that you don't, if your fiscal year is different from the calendar year, that you only close the books that are appropriate for your fiscal year. And then the ones that are applicable to the calendar year, that you close those at the end of the calendar year. So on this one, I'm pointing out that two of the key fields are basically the two fields that get updated as a part of the fixed asset year-end close. And that's the begin year cost. So when the fixed assets year-end close is run, it takes whatever is in the cost basis field and it populates that into the begin year cost. So on that annual activity report, it's showing the beginning cost amount and then the activity that occurs. So that's why you want to have your reports run before that field gets reset. And then, of course, the one that I mentioned before, the year-to-date depreciation, that's going to get zeroed out with the year-end, the fixed asset year-end close. Now, there is a step that you can take, but it's very optional, and you want to be very careful with that, is the summarizing of financial details. And when you do this, you specify the period that you want to summarize the detail. And this would only be for very old years of data. And when you do this, it brings up this message saying, are you sure that you want to do this? Because it's not something that you can undo. It's going to take the data and it's going to summarize it by year. So what I mean by that is if you were to go to the financial detail inquiry window and look up information for an asset, all this information for the same year is going to be collapsed into one number. So you don't want to do that unless it's very, very old data, which you don't want to see the detail for any longer. So it is something that you can consider, but be very, very careful, and I prefer that you talk with us before you actually do it. And then the book, another key thing that happens in the fixed asset closing is the current fiscal year is going to get incremented. So I apologize, the screenshot's a little bit out of date, but what you should see on your screen prior to doing the year-end close, it'll say 2014, and then after you do the year-end close, it's going to increment it to 2015. So that's a key thing that's happening in the process. So just to be aware that's a change that happens. Okay, I think I went a little bit, I lost my little intro page for the general ledger, interestingly enough. But that's the next step that we're going to go through. One last thing I want to mention about the fixed asset closing, there is no report that gets generated from the closing process. So don't be alarmed if you're sitting there for a while and wondering what happened. As long as the window refreshes, it's done. It just doesn't create a report for you. So on to the general ledger closing process. So this is of course, the key step of the general ledger. The key of what we all think of when we're doing the year-end close is really in the general ledger here. So certainly at the top of the list is you're going to want to complete all of your month-end processes. So just the same as we're talking about with fixed assets, you want to be sure and have run all of the processes for your month-end before you start embarking on the year-end. And the process that the year-end is going to do, it's going to take all of the balances from your P&L account, and it's going to close them to the retained earnings account. And then it takes all of the balance sheet accounts, the ending balances, and rolls them forward to the beginning balance of each of those accounts in the new year. And that transaction is indicated with a code of BDF, for beginning balance forward, or balance brought forward. So you get ready. Make sure that you've got all the transactions that you're aware of that you need to do for the year. You've entered and posted those. You print your financial statements. You create a new fiscal year. Now, you may have already had to do this, because of setting up budgets and so forth, but in this case we're talking about creating your year 2015. You want to check your retained earnings account and reset your next journal entry number or posting numbers if desired. You're going to run your financial reconcile utilities. You're going to check available disk space, and this is something for your IT, a question for your IT support, is that you have twice the size of your general ledger open file, which for the techie people is GL 20,000. You need to have twice that size for your closing process to be successful. You're going to verify your account posting type, which I'll discuss in a moment. You're going to certainly make a backup prior to the year-end close. You're going to run the year-end close and print the closing journal entry. So on the closing, part of the closing process, as I mentioned before, is that it's closing all the P&L account balances to your retained earnings account. And that account is specified on the general ledger setup window where it says retained earnings. So you want to be absolutely sure that this is the correct account. And then also a couple settings that are very, very important is maintain history. And you want to make sure that both of these boxes are marked so that when you close the year, it takes the transactions for 2014 and saves those to history for you. Also, this is where you can later allow for posting to history, later when you get your auditor adjustments for for your fiscal year 2014. You'll want to be sure and have that marked to allow posting to history. Now, something else that you can consider using is posting numbers, tracking posting numbers in the general ledger. And if you do so, you may want to reset those at the end of the year, the part of your process. And to reset, so you would come to this window to reset them as well. And the posting numbers, they're very nice in that they're assigned to each transaction as the transaction is posted. And that can be very handy because sometimes your journal entry numbers, you may not use all of your journal entry numbers. You may enter a transaction and decide after you saved it that you no longer need it, you're not going to post it after all, and you delete it. So there could be breaks in your journal entry numbers, but posting numbers will all be there because they're assigned as the transaction is posted. And also this is a good indication. Sometimes you may enter a journal entry before you save it and then enter another journal entry and post that later journal entry before you enter the first one. So you can see that the posting numbers get assigned as they're posted, not necessarily as they're entered, and that can also be helpful for historical purposes. Now, checking the posting types of your accounts is a really important step to take, and it's actually a pretty easy one, is making sure that your balance sheet accounts are set up as balance sheet accounts and that your profit and loss accounts are set up as profit and loss accounts. Sounds pretty simple, but it can happen by accident that one is set up wrong. Now, you certainly can come here to your smart list under accounts, and you could page through and look at these to make sure they're right. But what you might want to do is set up some exception type smart lists that show the exceptions, the ones that in fact need to be fixed. So in this example here, I've created one called P&L accounts to fix. And the criteria is the account number range that would be for P&L accounts, or anything that's greater than the balance sheet range. And then the posting type with an account number that's in the P&L range. And then the account type, you want to specify that it's only posting accounts so that you don't see any of your unit accounts or allocation accounts. So by creating these and running these, they'll only show you the accounts that need to be fixed. So talking about unit accounts, if you do use these, you may have accounts that you want to have the balance roll forward to the beginning balance of the new year, or you may have them where you want them to start over fresh with zero balance in the new year. Now, prior to GP 2013, you have to run a SQL script to clear out the beginning balances if you don't want them to be rolled over. But if you're on GP 2013, each unit account has an option here to mark it to say that you want to clear the balance during the year-end close. So here we have the year-end closing window, and you have one last chance to double check that retained earnings account. You can even drill back and make sure that that really is your retained earnings account. It has a starting journal entry number here. That's just the next journal entry number. You could reset that if you wanted to, but oftentimes people just leave that as the next number and just moving forward. You have a couple settings here. Remove unused segment numbers. If you want to clean up your account segments in the account segment setup table, if there aren't any accounts referencing the values, it will remove those. It doesn't remove account numbers. It removes segment numbers from the segment setup window. The other setting that's very key is maintain inactive accounts. If you want inactive accounts to be maintained, not deleted in your closing process, you want to mark that box. You can also say that you want to maintain only those that have budget amounts or all your inactive accounts. Okay, so that's it for the general ledger. We wanted to open it up to see if there's any questions at this point before we move on. And
Sure.
It looks like we have a couple here. Let's see.
Here, I'll answer them for you, Leanne.
Okay.
So we have a question to repeat the end date for support, which is for GP 2010, which will be October 2015. Why do you need to close the purchasing module as close to the year end as possible? That's so that we ensure that those metrics for the year are updated at the appropriate time. Does not affect your 1099 activity, but you do want to make sure that those metrics are as close as possible. Where do you print the 1099 edit list? So if you go to the window to print the 1099s, it's not overly apparent, but you will click on the printer icon, not the print forms icon. Or if you don't have that icon, it would just be File, Print, and that will give you the edit list, which will just give you an edit list view and not the actual 1099 forms. Also, during the fixed asset close, if you review your activities through the Smart List, just be sure that you export. I would export the Smart List before the year-end close. None of the activity goes away. However, the reports and some of the metrics that are in the Smart List will be reset at that time. We also will send out the slides. That's another question after this meeting, and Dee will have more to say about that. We have a few more questions, but in the interest of time, we do have one more section, so I'm going to go ahead and start that section, and then we will get back to any more questions after that. So our next session or module that we are going to cover is payroll. So the payroll module has some very specific steps and orders to which this year-end close process needs to take place. The first step is to install the 2014 year-end update, which is a repeat of what we had said earlier, but also equally as important to payroll people. You want to make sure that you complete your pay run for the current year. You want to complete any monthly and quarterly payroll and period end procedures before making a backup of your database. Now this is really important to do the backup because at that point you will go ahead and create a year-end file. After the file is created, we suggest taking another backup of the database while you verify your W-2 statements and print and send out any W-2s or W-3s. You will close the fiscal period for the payroll series, and after all of that is done, prior to running the payroll for 2015, you will install the payroll tax update. So here we'll go into those steps in a little more detail. So once again, just to make sure everybody's on the same page, the year-end update for 2014, fiscal year 2014, will be released at the end of this month for both versions 2010 and 2013, and also for you early adapters for 2015. 2010, this is the last year that you will receive these year-end updates, so it is important to consider moving to GP 2013 within the time frame of the support date, which is, again, October 2015. In the year-end update that you will be installing, we have changes to the W-2 electronic file, some product quality fixes, and payroll around the payroll year-end procedures. We have adjustments to the W-3 form changes, code changes for the 1099-R, and again, most notably, the Affordable Care Act functionality will be there for GP 2013 version. We will need to have more reporting done in the calendar year 2015, and so if you do not move to that new version, you will not get this additional functionality and features. The next step will be to check your last tax update. Now this is for your 2014 year, this for the close of the 2014 calendar year end. To check that you have the most recent codes, you want to go to Administration, Setup, and Payroll Tax. The last tax code update should read somewhere around December 18th, and this is an automated procedure, so all you have to do is go to that window and it should update the codes. So this will verifying this date will ensure that you have the correct FICA limits in place when you create the year-end wage file. To actually create the file, you will go to the GP, Tools, Routines, and then to Payroll and select Year-End Closing. This creates the year-end wage file with annual wage information used to generate the W-2s, W-3s, 1099-R, and the W-2E file for the year being closed. Now, should you happen to close that too early, you actually have the ability to cancel the year-end file, whereby you go to Tools, Utilities, and Payroll, and you actually remove the year-end information. That way you can make adjustments and then go back and close the year-end file again. Next, you want to print the employee report to view the W-2 information, and the year-end wage report. If you find that you need to make any edits to the W-2 files, feel free to go to this window, Edit W-2 Information, pull up the employee, and make adjustments as necessary in those boxes to the right. And you can also click the buttons on the bottom. So note that the special, others, state, and local boxes, you can edit wages for state and local taxes. 401k classification should be found in the Other section, and changes in this window do not affect the live payroll data. To print the W-2 forms, you will go to Tools, Routines, Payroll, and then select the Print to W-2s. The box on the top allows you to view inactive employee W-2 information prior to closing the year. You cannot run this report after you create the year-end close. So running a validation report is very helpful in determining if records have an address that is too long or a social security number that appears to be invalid. This is a picture of the year-end, the fiscal period setup window, where you will check the box to make sure that you close the payroll series for that year to prevent any further posting. And then prior to, after you close your after you print out your W-2s, then you'll want to install the 2015 tax file, and this is prior to running your payroll for the year 2015. So note, do not install the payroll tax update until for 2015 until the year-end file has been created for 2014. So to install that, you see the directions here. and Microsoft will actually release this update mid-December. So it's not out yet. But this will actually update the FICA Social Security limit for 2015. So it's important that you do not do this until you are done and complete with the year-end file for 2014. Here's a picture of the actual window. Because payroll utilizes the current tax tables in the system despite when payroll is run, you want to install the tax update for 2015 between the last payroll and the first payroll run. As if I didn't say that enough times. The timing is really critical here, so make sure that we get that correct. And that will bring us to a close of our slides for the overall year-end process. Now we'll take a couple of questions. So Leanne, what do we have?
Yeah. So one of the questions was, what do you do if you have several retained earnings accounts? And can you still use the X in the account segment? And absolutely. If you have multiple retained earnings accounts, you do want to mark the box for divisional retained earnings and specify the segment that the system should look at so it knows what P&L accounts to close to what retained earnings accounts. It says if we're online users, does Rose ASP do a backup? If so, when do they notify the customer? So if you're hosted with Rose ASP, they don't automatically load things. You would want to contact them and they would coordinate with you of doing the upload. Let's see, what happens if you have a module that hasn't been closed for a number of years? Excellent question. In regards to sales or purchasing or inventory for that matter, you can still do the close because it's going to take that year-date amount and move it to last year. So you can imagine the year-date amount in the amount since last close field is quite large because it hasn't been closed for a number of years. So when you move it to last year, then last year is going to be fairly large. And again, these are only in these fields called amount since last close in the year-to-date and last year. So any reports that you run by transaction, with transaction details and so forth, are not impacted. So it's actually, it's okay if you go ahead and close something that hasn't been closed for a number of years. Fixed assets would be another story, but I don't think that you would actually be able to do that. Contact us if you find that you have not closed fixed assets for a number of years, and we'll help you get through that. Let's see here.
We have another.
Last year, the module closing order was published as inventory, sales, and purchasing. Why is it different this year? I believe that's because sales, let me back up for a moment. Inventory, you may recall some of the summary amounts in the year-to-date are the amount sold, the quantity sold, and the sales amount and the cost of goods sold amount. So that, of course, is going to happen from sales transactions. So you want to go through your sales module closing first so you're sure that you have all of your sales transactions posted and that the module is closed. Then you move forward to inventory. So I think that's why we changed the order on that. Let's see here. When will the upgrade for Dynamics 2013 occur for MyGP Cloud users? Will the upgrade affect the year-end closing activities? That I am not sure. We'll have to let you know about that. We'll have to check with the GP Cloud support as to how they coordinate the upgrades in GP Cloud. And normally you would not do an upgrade at the same time you're doing year-end closing. That's too much going on. You want to do your upgrade separate and then do your year-end closing. Do you need to close modules that you do not use if we don't use payroll module? Another excellent question. No, you do not. If you don't have payroll, you don't need to go through that. If you don't have fixed assets, you don't need to go through that, and so forth. I think that's it.
For any of you Rose ASP customers, if you have any questions around scheduling of backups or year-end updates or anything of that nature, I do think that you should contact us. If you have not already contacted Rose ASP to actually schedule those activities. So because they are different instances, I think, to be on the conservative side, you should just email them and confirm when both of those activities or when those activities will take place, because it will affect the process that you have in GP. So just call us or go ahead and talk to the Rose ASP support to schedule that activity. We also
Very
have
good point, Erin.
yeah. We also have a couple of other questions
for you automatically.
Yeah. We also have a couple of other questions. How often should you take backups during the year-end close process? So for each of these modules that we talked about, the articles from Microsoft will say take backups, every time you click a button, and they're just being conservative. We do recommend that you do have your IT on hand should you need to restore from any of your backups. I also recommend for customers that have a very big database with a lot of data that you run a test close, and you can also see how long each of those processes take. If during that time they take a long time, I would recommend that you do a backup just in case. You don't have to do a backup in between every module if you don't want to. Just know that if you ever had to restore, then you'd have to be doing those procedures again. The one that is critical, I would say, is you cannot skip the backups for the GL close or the payroll process. And here at Armanino, we are able to help assist you with a test close, or if you'd like to have us on site for your actual close, just make sure to contact us early so that we can have that scheduled. Leanne, do you have any other questions?
Now let's see, there are a few others here. Do you have to print 1099s before you close payables? And that is not true. The closing process of payables, believe it or not, does not affect the amount that gets recorded on the 1099 itself. The 1099 amount is stored in a completely, the reported 1099 amount is stored in a completely different place from these amount since last close fields that we've been talking about. So really the printing your 1099s is you want to look at those due dates that the IRS has defined. That would really be your true deadlines. Let's see here. And where do you find the 1099 detail window if you do find that you need to adjust some transactions? That is under the cards section on the purchasing page. So you'll see under cards 1099 details. And to print the 1099s, those are, so the question is where do you find the print 1099 window? And that is in the routine section. In fact, all of the closing steps are in the routine section of each module. So on the purchasing page, under routines, you'll see print 1099. And also the question is, I'm trying to summarize this question a little bit better, but the question is, should I leave the GL open until I get audit adjustments? What is the downside to waiting to close the general ledger? So you don't have to wait to close the GL until you get your audited adjustments, because sometimes that's not going to happen for a few months. And the downside to waiting is that you're not going to have your beginning balance of your balance sheet account in your new year. So we recommend that you, as soon as you're done with your period end and you've got all the final year-end adjustments that you're aware of, other than the audit adjustment, you can go ahead and close the year, and that's going to roll forward the beginning balances of your balance sheet account to the new year. Then, months later, when you do get adjustments, you merely have to make sure that that box is marked to allow posting to history on your GL setup window, and you temporarily open up period 12 of 2014. Then you can enter your transactions dated 12/31/2014, and it will roll forward the adjustments to the beginning balances accordingly as if the entry had been there when you did the close. So that's why we say that you don't really have to keep it open, because you do have the ability to go back and make those adjustments. And also, what happens if you missed a PL account that was set up as a balance sheet account and you ran the GL close? Now what's happened, your P&L account has rolled forward a beginning balance in the new year. And that's really unfortunate, because you'll find in Customer Source there's a document on how to fix that. and it's about 10 steps, one of which is making everybody get out of the system, make a backup, and run some SQL scripts. So that means you're going to have to include your IT support or Rose ASP if you're hosted. It's really no fun. It can be done, and I've helped clients with it before, but that's why I really encourage you to take those steps of either reviewing your chart of accounts, looking at the account setup, and making sure that your accounts are set up properly. Set up those two smart lists that will show you the exceptions. So that will really prevent that from happening. And I think we've got a few more. Let me just
we got one more question in here, Leanne. Let me go ahead and answer this.
Okay. Sure.
So we will, do users need to be out of the system before closing any modules? The answer is, I would say yes as a best practice. For each of the modules that you close, I would restrict users to have access. The modules closing should not take too long. If you're worried about the timing, like I said, a test close is usually a good idea. The reason why you don't want users accessing the modules while you're closing them is because they could be altering the data for that time frame. So even though you close them out for that period, let's say that they couldn't post or whatnot, just having more users on the system could slow down the process. So we typically like to schedule it where there's downtime in between those modules, and definitely for the general ledger, because that one can take the longest, and in addition to like fixed assets. So we do recommend that you have a window set aside for when people will be out of the system so that you can do your closes. And this also helps if you have to do a restore. If people are in the system, then the restore won't take into consideration any changes that they've made since the last backup. So that is important. So thank you for your questions, everybody, and now we'll hand it back to Dee to close out our webinar.
Great. Well, those were some great questions, and if you happen to come up with any more, we have Erin and Leanne's email address displayed right there, so feel free to contact them directly with those questions. We'll also be sending out a link to the slide deck and the recording within 48 hours, so keep an eye out for that. And as you exit, you'll notice a brief survey. If you could just take a moment and let us know how we're doing, we'd appreciate it. So thanks so much for joining us, and we look forward to having everybody back at our next GP Tips and Tricks webinar.